welcome to the Investing from the 920 podcast, starring Josh Hansen. Today we're going to be covering the company Zoom Video Communications Inc. and how I decided to bet it all on this company. So what I'm going to be covering in this podcast is my decision to buy the stock, background information on the company, the change in number of users and why that's so significant, the fundamentals, the upcoming earnings reports, the company's various prices, their competitors, and finally, the recent news stories. So to start, the story of how I realized how this was the stock I had to invest in. So the day is March 13th, the day the students at St. Mary's University got the email that we are going to be sent home from school. And in that email, it included that we would be using Zoom Video Communications Inc. for our online classes. I was starting to think right then and there, man, this could be a great investing opportunity if this company is public. So I'm walking to my final in-person class of the semester, and there is when I text my dad saying, hey, we really need to look into this company because a lot of schools are going to be using this company. And I later realized that it wasn't just going to be schools, it was companies, small businesses, friends, family, really anyone that could have access to a computer that wanted to see their friends. So immediately after my class finished, I started my research on the company. I went right back to my dorm, started looking up the fundamentals, the news, its price, and I realized I had to invest in this company. So I actually had to wait for the money to transfer from my bank account to my stock brokerage account. So I didn't get my ideal price target of $107 a share, but I still got in at a nice price of $108.02. And that's the story on how I made 53% in 43 days. Moving on, Zoom's company statement says Zoom's Video Communications Inc. engages in the provision of video-first communications platforms. It connects people through various frictionless video, voice, chat, and content sharing and enables face-to-face video experiences for thousands of people in a single meeting across disparate devices and locations. It focuses on customer and employee happiness, a video-first cloud architecture, recognized market leadership, viral demand, and efficient go-to-market strategy and robust customer support. This company was founded by Eric S. Yuan in 2011 and is headquartered in San Jose, California. Now moving on to the number of users. Zoom's number of users just jumped from 200 million to 300 million users last week. That is a very large jump, and the number of users jumping 100 million in just a couple days is very, very impressive for any company, regardless of whether it is a video communications platform in the coronavirus outbreak. In fact, for any company to be not only increasing their users, but to become even more financially stable is truly impressive during this time of economic crisis. That number is very significant because it shows that the number of users that use Zoom hasn't peaked and is on its way down. It shows that the company is still growing and is still attaining users. Moving on to the company's fundamentals, and in the fundamentals, we're starting with the valuation. So Zoom's price to earnings ratio is 1,937.99 times. Now that is greater than 100% of the other companies in the software industry. This is insanely high, but there has been an equally insane increase of usage of their service. So with the virus outbreak, this has been the main platform that people are using to communicate with their friends and family without having to be face to face. Their price to earnings ratio is so drastic just because their users has increased just as crazy as how high this price to earnings ratio is. Moving on to Zoom's price to cash flow ratio, which stands at a staggering 582 and 30 times. Now again, that is another extremely high number, but it is also due to the equally insane number of users that use this platform. Moving on to its profitability, Zoom's gross margin is 81.47%. Now that is better than 86% of the companies in the software industry. They had a large niche market until the other major competitors moved in, like last Friday. Now, one of the main headlines I'll be covering later is how Facebook released its new video platforming communications that is just like Zoom. Moving on to its net profit margin, Zoom makes 4.06%. Now that is relatively low because they give out a free 40 minutes of free communication time until you have to upgrade to a full Zoom membership. And finally, in the fundamentals, Zoom's dividend. Zoom does not currently have a dividend, and that is not completely surprising because it's not a blue chip stock. Moving on to its earnings report, analysts projected its earnings of 7 cents a share, and on March 4th, 2020, their last earnings report, they beat expectations at 15 cents per share. Now, if you're wondering why that's a little low, it's because their earnings came out right before the drastic increase of Zoom's usage because the coronavirus outbreak hasn't really affected the US economy quite yet. The projected earnings for next quarter is only 9 cents. Now, I think this projection is fairly low because last quarter, when we hadn't really hit the increase of users, their next earnings report comes out in June, which still has some time to develop and increase users or to hit the peak of usage. Moving on to Zoom's final price on today, April 28th, 2020. Zoom's final price was $156.72 a share. Zoom's 52-week range is $60.97 at the low and $181.50 at the high. I was actually able to get in and out right in the mid-range. I was actually kicking myself last Friday when I didn't hold my shares for just a little bit longer, but on Friday, Zoom decreased about 12% when Facebook announced its new video chat option, which will be covered later when we talk about its competitors and the top news stories of Zoom. Moving on to Zoom's top competitors, at the top of the list, Facebook's Messenger Rooms was released last Friday, April 24th, 2020. This was very significant because a lot of people love to use Facebook and their messaging app, Facebook Messenger. With the ease of being able to use Facebook as a one-stop social media platform, this can take a big chunk out of Zoom's usage. Another top competitor is Google Meet. Google Meet is kind of the off-brand version of Zoom. It doesn't have as many luxuries. There's a little more issues with its usage, but it's still a top competitor. Another competitor is Skype, who has been around for around a decade and has been used, but is now more of a thing of the past. Finally, Zoom's last competitor is WebEx. Now you might be wondering, what is WebEx? Now, WebEx is not a super impactful competitor to Zoom because it doesn't have the following that Facebook and Google and Skype have already gained from having their past loyal customers. Moving on to the final topic of this podcast, we are going to be talking about the top news stories that affect Zoom. The top story is how Facebook released its Messenger Room. Now, this is a direct competitor to Zoom because it provides the same service but just mixed in with Facebook. This dropped the stock 12% in intraday trading last Friday. The next top story that we will be covering is the lawsuit against Zoom for its false or misleading statements about its inadequate privacy and security measures. There have been many prank videos where people will join in on Zoom calls and completely disrupt the professor or the business leader that is leading the meeting, and now they are taking measures to control the actions of these pranksters. Its final top news story is how Zoom picked Oracle as its next cloud infrastructure partner. Now, this comes to a letdown for its investors as they either suspected or wanted Microsoft, Amazon, or Google's platforms. Now, what most investors aren't realizing is that Zoom also uses Microsoft and Amazon for some cloud infrastructure aspects. They just wanted to broaden their horizons and bring in yet another company to help. Make sure to join us next week when we analyze the company Tesla and more in-depthly Elon Musk and his various companies. Make sure you like and subscribe for more videos like this.
Hi, Attorney Bob Jansen. All of Josh's opinions are his own and do not constitute financial advice in any way. Any data or content discussed should not be relied upon for investment advice. Josh strongly recommends that you do your own research and/or speak with a qualified investment professional before making any financial decisions.
I'd like to give a special thanks to these following people. Thanks to Robert Jansen from Jansen Law for the disclaimer, E-Trade for the research, and the intro and outro song, High Life by David Bullock.